Who will win the battle between the two AI tech giants, Microsoft and Google? In this video, I'll be breaking down how both stocks have been performing lately and provide you with some expert analysis on their recent developments. So let's take a deep dive into the charts. We're going to start off with the S&P 500 on this 3-screen setup. So we have the monthly time frame in the top left-hand corner. We have major levels of support and resistance displayed on the chart. The green line is last year's high, red line is last year's low, and the black dotted line are major levels of support and resistance. We have the weekly in the top right hand corner, and we have the trend filter color here. So green when the market is bullish, red when the market is bearish, and grey when we're seeing areas of consolidation or a correction. And the bottom time frame is the daily, and also we have the trend filter colors here as well. And also note that on the weekly and the monthly we have moving averages. So the weekly has the 50 and the 200 simple moving average, and the daily has a 20, 50 and the 200 simple moving averages. So let's take a deep dive in the S&P and see how the overall market is performing. So looking at the monthly time frame, we can clearly see this bull trend is still intact. So we have this bull trend which has been running since March 2009. There have been deep corrections along the way and long periods of consolidation. And right now, price is in this phase of consolidation. It has been so since January 2022. We can see there we had an all-time high created at $4,818. Then price declined all the way through to October 2022. This was a decline of around 27%. Since this low, price has recovered, so it's moved up by around 27%. So if we look at this month's candle, we are seeing a bearish move right now, and prior to that we were seeing some bullish momentum. So all the way through to July, price moved up, but then we had the reversal candle in August. During the month of August, there was a big bearish candle in display, but the buyers were able to push price up and closed as a reversal candle. But we are still seeing weakness this month, so we may continue to see a pullback before we see a continuation towards the all-time high. On the weekly time frame, the recent candle is grey, and we can see a mixture of green, grey and red candles. This is common when we are seeing an area of consolidation. Price will likely switch between these three trend filter colors until we see a trend established once price breaks that. So if price is to break above the all-time high, then we should see majority of the candles remain green. Some grey candles along the way, but majority of the candles should be green. And also if we have a breakdown below support, so here in this case it's $3,488, then the majority of the candles should be red if we are seeing a bearish move. But right now we are seeing a mixture of green and grey because we are starting to see a trend form within this wide area of consolidation. So now what we need to see is a continuation to the upside and a breakout of the all-time high. On the daily time frame, the bars, recent candles are grey. Prices in between the 20 and 50 simple moving averages, and the moving averages are not aligned anymore. We want to see the 20 above, so in this case we want to see the 20 above the 50 and a 50 above the 200, indicating strong bullish momentum. But right now the 20 is below the 50 because price is consolidating, and if we start to see bullish momentum once again, then we should see the 20 move back above the 50. If I just zoom all the way out, actually let's go to the weekly time frame. So if price is able to break above this consolidation high, what we need to see then is a move up above this area and a pullback and then a breakout above a previous high, just to confirm a continuation of the bull trend. Because if price does break above this level, it could turn out to be a fake breakout, which catches a lot of investors out. Many inexperienced investors will jump in at the first breakout, which is not the best thing to do. What you want to do is wait for that confirmation. Yes, you may jump into a trend slightly later, but you have confirmation and likely end up in a strong trending asset, which is likely to trend for several months and potentially over a year. So always apply patience and wait for confirmation. So let's move to the first stock on the list, which is Google. So I'm going to open up the monthly time frame. So Google is in between last year's high, which is this green line here at $151. So around the $150 round number. and in between last year's low around $83. The price declined from 151 to 83 and formed a support base here and started to move to the upside. So price right now is displaying signs of bullish momentum within this wide area of consolidation. What we want to see going forward is a continuation to the upside. It's been a slow start to September, a small bearish body, but as you can see, the month did start off bearish. It did come down to a low of $132, but the buyers have now pushed price up. So there seems to be momentum this month. So we now want to see a continuation to the upside and a move towards the all-time high. So Google is showing good signs of progress right now. On the weekly time frame, the bars are green. Some grey candles along the way, but the majority of the candles are green since price bounced off this zonal area here, the 200 simple moving average. So we've seen a pattern of higher highs and higher lows as price slowly makes its way towards the all-time high. And on the daily time frame, the bars here are green at the moment. Price is using the 20 and 50 simple moving averages as support as it slowly but surely makes its way back to the upside. So if I just zoom out, we can see where price is within this area of consolidation. So making progress, not too far away from the all-time high. If we are going to see a breakout, we want to see a move up, pull back, and then a break above a previous high. But right now, as price is in consolidation, we just need to apply patience and wait for that breakout. Don't enter on the first breakout because that could turn out to be a fake breakout. We wait for a trend to form above this whole zone of consolidation, and then we jump into a position, a high probability opportunity. Let's move now to the last stock, which is Microsoft. So on the monthly time frame, now if we just zoom out, we can see how strong this previous trend was. So we had a nice strong trend all the way, if we just mark it from around here, so 2014, all the way through to 2021. So this was a year's worth of trends, and then this was followed by a deep correction, which is normal when we see a really long-term trend. Price will eventually run out of steam and we'll eventually see a correction. And in this case, price declined all the way to $213 in November 2022, found a base around here and has been climbing to the upside. So unlike Google, Microsoft has actually broken out recently, so broken above the previous all-time high, which is at around $350. And we had a fake breakout. This is why we don't want to enter on the first initial breakout in this case, because we can see Microsoft broke out, turned out to be a fake breakout, and the price has now returned back into consolidation. So by waiting for a trend to be established above a long-term area of consolidation, you enter in a high probability opportunity and a trend which is likely to last for several months and potentially over a year. So right now price is back in consolidation, and if you look at this month's candle, a small bullish body, but displayed a reversal candle for now. And just above price, we have a major resistance, which is last year's high at $337. Then we have this high, which is from the high of November 2021 at $349. And then we have the all-time high from July, which is at $366. So three major areas of resistance above. If price successfully breaks through all three, then we will look for potential opportunities in this stock. On the weekly time frame, the bars are grey. Price is above the 50 and 200 simple moving averages. And on the also look before we go to the daily, we can see how price came. This decline brought price down to the 200 simple moving average, found support at this level in October 2022, and then again in January 2023. And we had two bounces from this level, and then we had a strong move to the upside. Price has now just pulled back, and seems to have found support. So we now want to see whether this next move will force price out of consolidation and form the next leg of the previous bull trend. Now going down to the daily time frame, the bars are currently green. Price is above the 20, 50 and the 200 simple moving averages. So here's that period where price broke above the all-time high. Again, we can clearly see on this time frame this turned out to be a fake breakout, then price pulled back. So unless price breaks above a major resistance, moves up, pulls back, forms a small pullback, and then breaks above a previous high. Unless that happens, we want to stand aside because it's more than likely we're going to see a fake breakout if price does not break above a previous high. In this case, it allowed us to stand aside and preserve our capital. We're now just going to wait for the next confirmed breakout. Once we have that confirmed breakout, then we want to jump into high probability opportunities. Hope you enjoyed today's video analysis and were able to take a lot away from it. If you did, then don't forget to like and subscribe so you can see all of our content, and hit that notification icon so that you can catch all of our videos as soon as they are posted on our channel. See you all on the next video analysis.